Good morning, I'm Raine Musñgi, and on this episode, and we welcome you to Follow the Money. Join us as we explore the tools and insights you need to jumpstart your financial journey. On this episode, we explore the strategies and secrets of attracting investors for startup companies. Can your startup turn into the next big thing? Let's find out from our expert guest today, Carlo Calimon, renowned entrepreneur and investor relations specialist. Carlo, thank you so much for joining us today. Welcome to the program.
Thank you so much for having me as well.
We appreciate you being here. First and foremost, can you share with us your experience as a startup and what Startup Village is all about?
Sure. So we started the Village around 8 years ago because I myself was a startup founder, and I'd like to think that Startup Village is also a startup. We started it because we saw the need for us to develop these new innovations from ground up. Being an educator myself, along with my partners, we decided to support the next generation of disruptive startups by helping them, educating them, giving them the proper foundation in order for them to succeed in the future. So we run incubation programs. Basically, these are lectures and mentorship programs so that we can pass on our knowledge and wisdom of starting the business, not just by ideating, but giving fundamentals so that they actually know how to run a business.
But what does it take to be a startup, to enter the startup community right now? What has been your experience that you would want to cascade to other startup companies?
Sure. So when we define startups, basically, we're looking for companies that use a certain degree of innovation, whether it's the use of platforms, technology, data, so that they can come up with a scalable company. So there is a lot of innovation involved. I know that there are times when people confuse a startup with just, I'm just starting a business, vis-a-vis the way we define it or the industry defines it, wherein there should be something that's innovative and disruptive with what you're doing. And that's the whole emphasis of the whole startup ecosystem. We want to create game-changing products and services that impact the lives of millions, if not billions of people.
And not necessarily technology.
There is supposed to be an innovation, and oftentimes it uses technology as a backbone. Because as we know, technology allows you to spread the product and service much faster.
And that's exactly where people, entrepreneurs, might need some help in employing technology for the business idea that they have. Now, based on 2023 data, we know that there has been a surge in investments in startups in Southeast Asia. That's about 12% on the year. What does it take for startup companies to actually utilize this momentum, for their advantage?
I think that there are several things that you have to consider. How big the problem is, and is it even worth solving? And are you the right person to actually solve that problem? Because we want to make sure that you are capable of actually executing on the solution. Because as we know, when you form a company, it's about creating these products and services that solve these big problems that we're encountering on a daily basis. So if there is what we call product market fit, meaning there's a big problem, you have a wonderful solution, but at the same time you have potential users or customers lining up to pay for these solutions, that's something that you have to take a look at and balance out. If the investor sees that you're creating something impactful, and obviously they're an investor, so they're looking for a return on investment, they are going to come to you. And they're going to see, hey, this might be a company worth taking a risk on or supporting for their growth.
Well, later on, we'll talk about what kind of leader it would take to actually, head that kind of startup. But first, we know that there's about 15% more startups that began here in the Philippines. And, what are the key factors or characteristics that investors are looking for in a particular startup so that they would actually invest in that?
Yeah, what investors typically look at is, number one, the founder themselves. They want to see the personality of the founder. They want to see if that founder is in it for the long haul. They want to be able to see how that that founder is able to rise above the challenge, because it's going to be a difficult journey. People think that it's all fun and games, when in fact there's a lot of challenges along the way. So the investor would look at the personality and the values of the founder themselves before actually making an investment, because they want to make sure that, hey, this guy is going to really push hard, work hard, so that I get my return
back,
on investment. Secondly, they'll also look at the problem that founders wants to solve, because ultimately it's all about creating game-changing solutions, as I mentioned.
And so where are these founders usually from? Is there a particular segment of society, or maybe geographically, is there a place where they usually arise from?
I'm a firm believer that startup founders can come from anywhere, simply because we have such a talented population. We're more than capable of starting businesses. I just think that there's a lot more opportunity for us to spread the opportunity all across the country. Right now, you'll see a lot of founders in Metro Manila, in key metros all around the country. But you'd be surprised that there are some game-changing founders that are coming from far-flung areas like Catbalogan, Samar, for example, which is not your typical location to find these startup founders.
Right. Well, I mean, apart from how a founder, for example, presented to the investor, is there a scientific way that they actually assess or make assessments of these founders?
Yes. When a startup pitches to an investor, it's like, it's an introduction, right? You want to get me interested. But after you get me interested and I see your potential and I see the potential for the business, that's where a lot more details will be assessed. The investor will take a look at the product, the technology behind it, your capability, the team, but also at the same time, they're going to look at the logic behind the numbers that you're presenting. Ultimately, it's going to fall back to the numbers and the impact that you can create.
Correct. Well, talk about numbers. We know that according to, again, recent data, we have 20% more funding going to social impact startups. What does that mean? And what kind of social impact initiatives are there that are the most popular, perhaps, among investors?
Yeah, right now we're talking about social impact because a lot of the solutions that are coming out recently are trickling down, especially trying to solve the problems of the masses, right? You have sari-sari store solutions, which is very common everywhere, and there are intricate problems that need to be solved. You have the logistics angle because you want to get goods to everybody. Those are just some. But also at the same time, I think that there's a lot more also trying to solve, those small problems that are actually quite big, right? That are very impactful, whether it's related to traffic or like weather related, like flooding and things like that. The reason behind investor interest in that is because obviously there's a lot of people that are impacted by it. So it's a big problem that needs to be solved. But also at the same time, it helps elevate people, right? And I think a lot of investors see the value in elevating the lives of people.
Right, and so far we've talked about how important the product actually answers a particular need, and also how important the founder is of every startup. And we know that about 30% of investors buy into a startup because of the founder. So what if you are not a natural leader? You're not a natural, business person. Is there a way to actually get over that? Is there training or skills that you can actually accumulate to get over that hurdle?
I think that the first step really is understanding yourself first and foremost. You have to understand the role that you play within the organization. Especially as we've seen, there are a lot of great ideas coming from technical people. But technical people oftentimes are not the best salespeople. They're not the best people to talk in front of investors. So what happens a lot is either you get a lot of mentoring and training, or you find a co-founder that can bridge the gaps that you have from a company perspective, from a skill perspective. And that's how a lot of companies do it. So you find a CEO that fits the role, and that the founder, essentially, if you're a technical person, becomes the CTO or the CIO, right? So you know your role, you have to know your function within the organization.
Right. Well, we do have to take a break for a moment. You hold that thought. We'll be right back. Follow the money. We'll be back in a moment. Stay with us. Welcome back. You're still watching Follow the Money. Let's continue our discussion with Carlo Calimon, entrepreneur and investor relations specialist. Carlo, where we left off, we wanted to talk about how startups differentiate themselves, especially sector by sector, and attract investors, they're answering a need, but probably not the most popular kind of sectors are being touched by their product or service. And what kind of government regulations or incentives might be available to them so that they can have an easy launch?
Yeah, so it's wonderful that you mentioned that, because we have the Philippine Startup Act that was launched a few years back. And there are 3 agencies that are overseeing the implementation of this act, and that's the ICT, the Department of Information and Communication Technology. You have the DOST, Department of Science and Technology, and the DTI, the Department of Trade and Industry. And amongst these 3 agencies, you actually have incentives in place. There are regulations that are in place to encourage more startups to be developed. Which is great, because we need all the support that we can get. And this support comes in the form of the formation of incubators all across the country with different universities. You have grants that aspiring startups can also take advantage of. And also you have these 3 also trying to push a shift in terms of regulation, especially from a local perspective. But also at the same time, we've also seen some cities create their own programs or sandboxes, as we call them, to spur more and encourage more startups to actually form within their respective boundaries.
I'm starting to wonder. I mean, of course, there are TV series that actually spurred more interest in startups, especially, and there's a Korean series on that. There's also an American series on that. But it does make you wonder, how these venture capitalists, how they invest if they can see a clear pathway to the profitability of a startup. I mean, there are no guarantees for these things, but you can help these startups make sure, chart their financial path.
Yeah, so that's what we try to do. Because as you mentioned, these venture capitalists, especially the ones who really know the game, as we say, they understand that it's high risk, high return. But also at the same time, they understand that if that one startup out of their 10 investments succeed, it's gonna not just give them the proper return on investment, but they can also see the impact it creates towards the bigger picture, whether it's a community or even a nation, or even expanding from a global perspective. They understand, they know the formula already. But they also, as I mentioned, look at the potential. They invest more in the potential and the founder themselves, because the founder is key, because the founder has that vision of what they want to change, what they want to create. And the solution can even change over time. But that vision of solving that problem will remain the same.
What is a typical return on investment timeline for startups right now?
So from a global perspective, a lot of the funds or the VC funds would expect a return after, let's say, 8 to 10 years.
That's pretty long.
It's pretty long. It's a long game. They don't expect returns, within the next maybe 5 years or even 3 years. Some investors take a look at it from a short-term perspective. But for these types of investors, they're in it for a longer haul, right?
And what's a typical amount of investment that you've seen in your experience in any startup?
It depends on the stage the startup is in, and also depends on where the money is coming from. We were just in Canada a couple of months back because we helped accelerate around 4 startups. And what we realized there was that if you're pitching for angel investment or early stage investment, the minimum that investors would take a look at is $1 million, for example. But here in this region, if you take a look at it at the same level, it's going to be maybe around 500,000 US. So it's half, right? So it depends on where the investor is coming from also. And they're also going to look at the potential for you to expand in their respective markets.
Because of that currency differential, do we see more interest in Asian startups? Does that guarantee like a bigger amount of return for the investors?
I think they don't necessarily peg it based on the currency difference. They're really looking at it from a market perspective because, as we know, even if there is a price differential, the capacity to pay also by customers will be based on local currencies as well. So it kind of balances off. So they're really looking at it from an economic perspective, the bigger picture.
Right. ROI of 8 to 10 years is pretty long. So a lot of things can happen. Do you see a lot of VCs, venture capitalists, investors exert control over these particular startups?
Typically, it depends on the type of investment that the company receives and the size of the investment. There are a lot of VC funds wherein they take a board seat, right, so that they can steward and monitor the progress of the organization as it comes along. But they don't typically want to take control. Because the founder is, that's why we mentioned the founder is key, because the founder has a bigger picture in mind and they have a direction that, that they want to follow.
Right.
Because oftentimes when you see a product in the market, especially from a startup, you'd see maybe like version 2 or version 3, when the end goal is actually version 10, version 20, right? And that's where the investor wants to take them, version 10 and to version 20. Because this one is just, okay, we just need to go to market. We need to solve it, the problem, at least part of the problem, then scale up as we go along.
Right. Well, I mean, it's not all good news. It's not always a windfall for these founders. According to data, we also have 9 to 10 of these startups that fail in Southeast Asia within the first 3 to 5 years of starting up. But so what do Filipino startups and founders do to mitigate the risks of failure?
Well, failure is part of the whole game, right? And the best that you can do is do your homework, grind it out, and be good stewards of the resources that you have. It doesn't mean that just because you get an investment, it's party time, right? Which is something that we've seen. It's really you being stewards of that money because you need to pay it back in the future. You have to be good spenders of that cash, of that, and maximize that resource to impact the growth of the company.
We're seeing a lot of investments in AI, as well as green technology, as well as socially conscious and not just social impact companies, startups. So what kind of investments are you seeing there? Like what percentage perhaps, or how popular are these avenues, AI, green, and socially conscious? What is their success rate considering these potentials?
Well, I think from a global perspective, that's really where everybody's attention is at, because it's AI, for example, it's a hot segment at this point. Then obviously green and sustainability is also high on the agenda, especially with the development goals that everybody's after in achieving. I think that more or less everything's equal. It's just that some segments would be faster. Like AI right now, investment in AI companies is becoming faster, right? But right now what we've seen also when we go around, especially in the North, what we've seen is right now when people pitch, they don't say, I am the AI for this, I am the AI for that. Now it's expected that you are actually using AI as part of the core technology of your organization. Because last year when we attended conferences in Canada or even the US, they would say, I am the AI for sustainability, I am the AI for finance and things like that. Now you don't see them singling out AI as a highlight of their pitch. It's expected that you are actually using AI already.
So perhaps as a final thought, what kind of startups would you like to see in the next year or 5 years? And what kind of legacy would you like to leave as a startup founder yourself, and for helping all of these startups get to where they need to be?
Well, from my perspective, I'd like to see more Philippine startups become global, and that's what we're trying to do as Startup Village. We want to give them an opportunity to go beyond the Philippine borders. But also at the same time, if you look at the core of these startups, it's them solving local problems. And I think that them solving local problems that are scalable becomes more impactful because I want to be able to impact the lives of not just millions, but billions of people, positively impact their lives. And I think that the Filipino startup can actually do that. And that's the legacy that we want to leave with Startup Village, helping discover and nurture these game changers, because the more we create of them, the more we help improve the lives of people.
Well, looking forward to you breeding the next Filipino game changer in the world. Thank you so much for joining us today,
Thank you so
Carlo
much.
Calimon of Startup Village. We appreciate you being here.
Thank you.
And before we go, we leave you with a quote from American investor Warren Buffett. A successful investor is one who knows how to leverage the right opportunities. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News channel, always on top.